Welcome to Hot Topics on the Edges Show. I'm January Jones, here with my co-host Josh Krieger. Today we are joined by Jill Friedman, Chief Operating Officer at Symbiotic. Thanks for being here, Jill.
Thanks for having me.
It's great to have you. Coming up, crypto pump and dump schemes. The Genius Act moves forward, or does it? And the state of crypto in Canada. Plus, we'll hear from Jill about Symbiotic and some of the evolving ways that they're changing the game of staking.
This is another production of The Edge of Company, a rapidly growing media ecosystem, empowering the pioneers of Web3 technology, culture, and innovation. Let's get going. So today we're going to start and talk about pump and dump. There's a research project from the University College in London, and it found that 438 masterminds are behind most global crypto pump and dump schemes. They use social media to spread hype, to manipulate prices. The report documents a move of 3.2 trillion in fake trades in 2024 and says organizers pocketed 250 million in 2023 while leaving most investors with losses. And it happens quick, just in minutes, to a few hours after the pump signal is sent. So we've heard about a lot of these. It really does give crypto a bad name, although in some cases, this is the first introduction people get to crypto is through these coins. Jill, you've been in this space for well over 10 years. You've been a lawyer, a COO, and you've even been involved in policymaking at the national level in Canada. What are your thoughts on this research and what's happening with these schemes?
Yeah, I think you hit the nail on the head, January, when you said that it gives crypto a bad name. And yeah, it's really, for as long as I've been in this space, the shadow of crypto is used for criminal activity has just been a topic that anybody that interacts outside of the crypto native environment needs to contend with and often needs to respond to. And what I usually say to not people that are less familiar with the crypto world or maybe more skeptical is, I guess on one hand, yeah, crime happens. And whatever is the technology du jour of the day, people are going to take advantage of that, and criminals be criminals. That's the way it works. And it's just whatever, if it wasn't crypto, it would be something else. And then the second thing, though, that I think is really important to remind those that would maybe want to use this story as, oh, look how bad crypto is and look at all the abuse that takes place, is, wow, we have this amazing set of tools to be able to investigate and actually get to the bottom of a lot of this activity. Can you imagine the amount of financial crime and pump and dump that happens in traditional markets that potentially goes undiscovered, or takes years to discover, or takes millions of dollars of taxpayer resources by law enforcement to figure out what actually happened, versus, I don't know, this is one tool that was built in a university that now can be deployed at scale. Yeah.
Yeah, I agree with you, Jill. That was my first thought is, wow, the light just got brighter around what's going on behind the scenes. It's causing problems in our industry that are distracting everyone from the real world applications of blockchain. And I'm not surprised. It's a small minority, and our industry at this point has tens of thousands of good actors that are committed to progressing the industry in a meaningful way. So I'm excited about this tool, and with the type of work that these guys have done combined with bigger players like Chain Analysis. And what I've seen is when someone opens the kimono with something in the industry that's not sort of, so what I've seen is when someone opens the kimono and reveals bad actors, there's a pig pile in our industry, and we get to the bottom of it. And now we have that opportunity here to do that with something that's been causing or plaguing our industry for quite some time and distracting from all the exciting things that are happening legislatively from a regulatory perspective with advancements of technology that are changing enterprise and government. So I'm excited about this news and optimistic that tools like this combined with AI can get to the root cause. I think the beauty of blockchain is it's all on chain. And it's not a secret what's happening there. And with more sophisticated analytics, we can get to the bottom of it. So this is great.
Well, really what they employed was they were analyzing the social networks, right? Because this is part of this. This is the social engineering part of the pump and dump schemes. And so they were tracing mostly on Telegram, according to their study, but we've seen those hype come on all kinds of platforms in social media. So I find that pretty interesting, the social effect. I'm wondering if you guys have any comments about that, because I think if there wasn't these networks, if people didn't get this FOMO or want to think they could make a bunch of money, these schemes wouldn't be so effective. But this is a lot of money, 3.2 trillion in fake trades. This is a significant piece of what's happening out there. And although the perception on the mainstream media is this is one of their favorite stories to cover.
Yeah.
Yeah. I mean, crypto Twitter got its name because it's been the sort of communication channel of choice for public sentiment around new projects. And it's been where projects build awareness and build alliances and build community. And with that comes sort of folks that are trying to manipulate this type of world. And I think recently X took a lot of projects offline from my understanding. And that sort of has shaken things up with the DeFi industry, for example, and various players involved. So I think that this news probably has kind of made its way to the leadership of X as well, and they're thinking about how can they prevent X from having this negative reputation. I think Elon has become a polarizing figure in our society. However, at the same time, there's an opportunity here for him to sort of take this information and do the right thing.
Every cycle has its activity that becomes really, really, really hot. And this, there may be more than one activity, but more recently it was meme coins. And often, there's less building going on. It's more shilling. It's more a fast buck. And there's a lot more sketchy stuff happening around these activities. And unfortunately, in every cycle, they tend to take up a disproportionate amount of the mainstream news cycle in terms of how they cover crypto. Hopefully, with some of the legislative changes going on in the US and the opening up of this space to more traditional players will just change the narrative a little bit more and create more diversity of topics to cover on the news cycle other than just criminal activity.
Yeah, well, we will see as things move forward with the different legislation that's happening in the United States. And that brings us to our next topic, which is the Genius Act. So there's been a lot of talk about the Genius Act in the crypto circles. It's been kind of a long time coming. It is a stablecoin bill. It's going to give the first federal rules for stablecoins, and it just passed out of the Senate. And so this will require full reserves and regular audits for stablecoins. And while everyone's pretty excited about it, the bill is not perfect, and it still has to go to the House to be reconciled with their own bill that has different provisions in it, right? And so the bill for the Genius Act that's come out has some major critiques about lacking strong consumer protections, giving regulators too much power. And there's another controversial aspect about prohibiting members of Congress or senior executive branch officials from issuing stablecoins product while serving in office, but it does exempt the executive family from that rule. So many in crypto are acting like this is a done deal, but I'm not so sure. It still has to go to the House. And when we know things get to the House of Representatives in the United States, it gets a little messy. So although we all are in the crypto world, we run in a little bit different circles. So what are you both hearing about the bill within your own networks?
Yeah, so it's interesting because a lot of people were celebrating this bill. We saw the price of Circle stock jump up significantly on the news of what happened with the Senate. But at the end of the day, there is sort of this strong conflict of interest, consumer protection debate that can become quite heated, and even, a stalemate is possible. So I think The important thing to understand is the ink is not dry yet. It's probably, from what I'm hearing, highly likely this bill will pass, but it's not guaranteed.
It's interesting. The reminder that this is not a done deal is one that perhaps more people should be reminded of, because if you scroll through my Twitter or LinkedIn feed, it's everyone's popping the champagne and is very excited that this has happened. I think that's reflective of how thirsty this space is for validation and any sort of regulatory clarity, that perhaps our celebration is a little bit premature, but we're just so excited to have any sort of clarity and confirmation that from, the broader society, broader financial industry and space, that yes, we acknowledge crypto is here to stay, which has already kind of been done since the administration came in, but moreover, we want to work with this space. We want to make it easy for traditional financial institutions or anybody who's building to build in this space. And I think perhaps we jumped the gun a little bit in all of our online celebrations. And what I would also add is that there seems to be, as you mentioned, some important distinctions between these two acts. And I wonder if the celebrations might be a little bit more dampened if some of the provisions of the Stable Act end up in the final legislation, because those are a little bit tougher for crypto projects to work with.
This is us seeing for the first time really letting our Congress, legislate and make rules about this, because in the last year, we've seen the SEC regulating this, right? Making rules kind of by lawsuits. And so if this is really in the hands of the people, my question is, how educated are the people in the House and even the Senate, right, about the crypto space? And I think we'll see some of those debates come up with what they're talking about. And we might see, the kind of imprint of this crypto fear that's been in Washington because of the SEC, that there hasn't been a lot of education about this industry for politicians, because the companies have been keeping their heads down so they didn't draw attention to themselves. So we're going to pivot. But relatedly, Jill, you just recently wrote an op-ed that was in Cointelegraph, and it was focusing about Canada. So maybe we can contrast a little bit of what's going on in Canada and why you think it's stalled versus what's happening here in the States right now. And maybe there's some learning to do on both sides.
Sure. So Canada actually wasn't always kind of placed in this bucket as being slow to move or inactive with respect to this space and this industry. Like some of the founders of Ethereum are Canadian. There's a lot of really great talent in the space that is either based in Canada or originally was from here. We also were the first to launch crypto ETFs. We have crypto like Ether staked Ether ETFs that the US market still doesn't have, though likely will soon. And so based on that history, Canada should be well positioned to capture new opportunities that crypto and blockchain present, specifically ones that help us meet our objectives as a country to grow our GDP, to improve our economy, to be a better place to build and to grow businesses. And this is a technology so then contrasting it to the American market, everything really just changed between the last administration and the current administration. So you've seen a huge shifts with respect to the approach and I would say even warmth and in this space from the administration and from lawmakers. And now you're also starting to see legislation, as we just discussed, which will help unlock massive amounts of building, of innovation, of partnerships. And so, yeah, what I would say to Canada and what I mentioned in my op-ed is that it's time to take this stuff seriously again, as we sort of initially did, but then something along the way, the plot was lost, and to pay attention to this massive opportunity.
So your history, explain a little bit of this. You were working with the National Bank of Canada on crypto policy. Was that in 2014? Very early.
So yeah, sort of yes, sort of no. I launched a Bitcoin and crypto based law firm in 2013, 2014. And that actually, in those very early days, there were really not very many people speaking loudly about this technology and this space and the complete disruptive nature of it. And so I had the opportunity to build relationships with policymakers. I testified before the Canadian Senate. They were really just trying to understand and wrap their heads around what is Bitcoin, let alone everything else that came following it. And I think many of them might still be trying to figure out what is Bitcoin. But following that, I led crypto and blockchain strategy at National Bank of Canada, which is one of Canada's big banks, not to be confused with the Bank of Canada, which would be the currency issuer. And so I was responsible for identifying opportunities for banks to get exposure to this new tech.
Well, and now here in the United States, we're seeing with this stablecoin legislation, banks coming in, right? They want to issue stablecoins. Other companies can essentially become banks. So in Canada, if that stalled, but you did get started early, relatively compared to the United States, it really wasn't coming up as a policy issue back in 2014.
And so you brought up banks, and I'd like to just unpack that, because stablecoins, especially the way that the legislation is drafted in the US, is a jackpot for banks. Because really, if you look at what a stablecoin is a digital representation of a dollar that's held in a bank account. And a huge part of the premise of the business model of a bank are the deposits and how the size of the deposits that bank can hold. So, purely from a business perspective, the opportunity to be holding those deposits and earning yield off of them through exposure to, in the US, T-bills or other money market type liquid funds is a huge revenue opportunity for banks. And so I would expect that banks in the US are quite pleased about the way that this regulatory framework has panned out. And I would say that perhaps from a consumer angle, we should be a little bit more suspect about, well, how is this going to prevent asset holders of these different stable coins from actually collecting on some of the yield that the banks might just take all for themselves?
Yeah, really interesting insights, Jill. And I think that the other side of sort of the yield conversation, of course, is staking, which brings us to a really interesting moment to sort of learn a little bit more about Symbiotic and how you guys are sort of changing the underlying infrastructure for staking. Tell us a little bit more.
Sure. So Symbiotic is a universal staking framework that creates a marketplace for economic security. So it enables not just networks, but any type of project or financial activity that needs security to be able to access it from a large pool of capital, of on-chain capital, that capital is looking for opportunities and projects and networks to stake to and thereby earn a yield off of. And so we've created the infrastructure to not just secure networks through staking, but a system where staking can effectively secure anything. Think insurance underwriting, oracles, et cetera. And yeah, we're very excited about what the future holds.
What are the implications of that across various industries that are not necessarily crypto native? When you look into your crystal ball, what are the implications here?
Yeah, a great question. I think the implications are that the concept of securing obligations or activities economically is not novel to crypto. It's actually a very frequently used concept in traditional finance. And so the implications of having a digitally native on-chain capability to provide not just security through staking, but the flip side of staking is also slashing and having implications resulting from actions that take place. And so TLDR, the implications are that we can not just recreate traditional finance on chain, because I think that would be too small of a vision. It would be to just amplify it and democratize access to these investment opportunities, and also democratize access to not just builders, but borrowers and insurers who are looking for access to lower cost capital.
Very cool.
So we just went live on mainnet in January, and we closed the Series A led by Pantera in the early spring, and we're building, and we're very excited. Big things ahead.
Yeah. Well, congrats on what you've done so far, and look forward to following along with you guys on your journey.
Thank you.
Well, that's going to wrap up today's episode of The Edge of Show. Thanks to Jill Friedman, Chief Operating Officer at Symbiotic, for joining us. We covered crypto pump and dump schemes, the Genius Act, and the state of crypto in Canada. Join the conversation on socials and let us know what you think is a hot topic in crypto and AI.
Yes, thanks again. I'm Josh here with January and Jill. Stay curious, keep pushing boundaries, and don't forget to subscribe on YouTube, Apple Podcasts, or Spotify so you never miss what's next on The Edge of Show.